Hey everyone, Al Abarola for Financial Intelligence Training. It's Wednesday, it's October 31st, and it is 2018. I'm in Fort Lauderdale, as you can tell from my desk, and I am ready for this month to be over and hand out some Halloween candy tonight. We are less than a week away from midterm elections, and it seems that we're going to have a shift in command. It will be hugely interesting to see if the Republicans actually can retain control, but it really doesn't appear that's going to be the case. Now, how that plays out in the markets, well, that will be very interesting to see. I suspect that if the Republicans retain control, we're going to see a strong rally in the market. But if the Dems step in, well, we may see some hesitation, especially if we have a split. Well, let's leave policy out of the equation for a moment and let's just talk charts. Even with the last 2 days of monstrous rallies, there's still a ton of technical damage that's been done. Now, the good news is that the downside moves have been overextended, and that leaves a ton of ground to make up to the long-term moving averages and even a further trek to the short-term moving averages, which gives us room for recovery. So, what will have us rally? Well, strength. Someone, meaning stocks, have to start doing some of that heavy lifting. Now, we're likely going to see a lot of waffling over the months going back and forth. Go back and look at the February moves. In an earlier video this year, I said we need to work off some of that technical damage to have a move that's meaningfully higher. Well, if we're to have a move higher, the same goes for right now. Now, we've seen some major shifts over the last 60 days from the betas to the bigs. So if the beta party can get jumping again, well, then so can the market. Now, looking backwards on the fall as a gauge of what we want to see moving forward and what's going to get fixed is participation, meaning broad-based participation, and that was absent on the highs. We had a very narrow tape with the market at the all-time highs. We had more lows that were being made than stock highs. Now, I've stated this on the channel before, but I'm going to state it again. When we were hitting highs in early October, the advanced decline lines told a very different story. I tell people to think of it like this. Just a few stocks doing the heavy lifting, well, what happens when they get tired? Think of it like a tug of war. Think 5 strong guys on one side. Now think 4 of them, well, they're getting tired. Only one guy is doing all the work. And when he finally gets tired, well, everybody falls in the mud. Now pull up a Dow chart. Look at 10.9, and look at 10.10, and then look at 10.11. That was the last strong guy, and he got tired, and bam, right into the mud, everybody fell. So to avoid that fragile nature, we want to see broader participation, and time's going to tell there. Now, if you're trading these moves right now, and all this wild volatility, you got to remember that stock and stock options has an enormous amount of risk and isn't suitable for all investors. If you're watching the charts like I do, well, please remember that past performance is not necessarily indicative of future results. I'm Al Abarola for Financial Intelligence Training. Thanks for watching, everybody. Happy Halloween.